Hello, my dear friends. This is CH Hegde. Welcome to Let's Learn SFM Practically, session number 10. Disclaimer first, this is for education purpose only. Do your own analysis before investing. As usual, 4 segments in daily session. First segment, quote of the day. There is a time to go long, there is a time to go short, and a time to go fishing. Jesse Livermore. He's one of the very popular person who have made a good name, good money, and had a lot of variation in his life. A popular name in the field of trading, option trading, futures trading, stock market trading. You can learn about him more. You can Google his name. You'll definitely learn more about his life and also stock market. So what is trying to tell? I will explain when I go to the terms of the day discussion. I'm continuing with the options discussion here. Call option holder writer, put option holder writer, you're already aware of these terms. Now let's try to understand when to become call option holder, when to become put option holder, when to become call option writer, and when to become put option writer. These terms, I'm assuming you're aware of it. I'm not explaining it. Now there are two possible situations that you can have a view that market will go up. Your view is important. If you don't have a view, then we have something called as non-directional strategies. We discuss it later. Let's say if you think that market will go up, then what you can do? If market will come down, then what you can do? For example, you take a bullish view. I'll just talk about you taking a bullish view. I'll take that as example to make you understand. You are having two choices. You can become a call option holder, or you can become a put option writer. I will explain about the bullish view. You try to understand similarly about the bearish view, or I can try to cover it in the subsequent session. Today I'll talk about if you have a bullish view. You have two choices. Call option holder means you have a limited loss. What is limited loss? Whatever the premium paid. That's your maximum loss. And what is your profit? Profit is unlimited. You can go up to any extent you want. If you become a put option writer, then your loss is unlimited practically, and the profit is limited. How much profit is limited? To the extent of premium received. So by looking at this, most people will think theoretically call option holder, limited loss, unlimited profit. This is better than going for put option writer. So we'll go for this. That is how many people lose money in the stock market. What is the reason? I will try to explain. For example, I will take Reliance. And you go for a strike price of, let's say, 2000. And call option premium, I'll say call option premium, CP, I'll say, let's say it comes to, for example, any month expiry, let's say 20 rupees. And the put option also, I'll say 20 rupees. It may be different. Okay, let me take 21 rupees. It may be more also, less also, depending on circumstances. Now listen to me carefully. If you become a call option holder at a strike price of 2000, today you pay 20 rupees. Okay. When will you make profits? Only when the stock market, Reliance share price is going beyond 2020, because price premium is 20 rupees. So only if it goes beyond the 2030. In fact, I'm talking about this month expiry, which is coming in a week's time. Just 4 trading sessions, including Monday. So 2020. If it crosses 2020, then only you make money. Sir, 2000 is what I'm betting. I mean, I'm taking a view, correct? But you paid 20 rupees also. So 2000 rupees the strike price plus a premium 20 rupees. Only if it crosses 2020 or above, then only you make money. So if the stock market falls, you lose. If the stock price remains same, then also you lose. If stock price goes up, but before 2020, still you lose. So for you to say I'm making money in call option, it has to cross 2020 and stay with that. Just crossing is not sufficient. At the expiry time, it has to remain beyond 2020. Now let me tell you what will happen if you are a put option writer in call option, in put option in Reliance shares. If the stock price remains at 2000, you receive whatever money you received, that is your premium profit. If it goes to 2001, 2002, 2003, 2004, 2020, 2050, does not matter. Still, whatever the premium you have received, you will pocket it. If it comes to 1990, still 10 rupee down, you already received 21, so you still have 11 rupee profit. If it comes to 1980, 20 rupee loss, 2000 coming to 1980, 20 rupees loss, 21 rupees, you already received a premium, still 1 rupee profit. Do you understand the situation of call option holder and put option writer position? So call option holder, for you to make profit, market should go up and market should go up significantly high. Then you are having a very good situation. Whereas with respect to put option writer, when the market goes up, you make profits. If the market price remains same, you make profit. If the market price comes down, you make profits, provided it does not fall drastically. So when you should become call option holder, see, view may be the same. Okay, I'm taking a view, market price will go up. That is not sufficient. What is the appropriate strategy you have to apply? Okay, I'm taking a bullish view on Reliance. Reliance will go up in next 1 week. That is my conviction. That is my analysis based on the charts, what we have seen, based on the news which have come so far, and the market movements in general. So taking into consideration, let's say we are taking a view, Reliance will go up. Now, if I become a call option holder, then Reliance should go up beyond 2020. Example I'm giving. If premium is 20 rupees. If premium is 50 rupees, it has to go up 2050 or above. But with the same view, I can also become put option writer. Market need not go beyond 2020. It is sufficient if market remains 2000 and the premium received 21 rupees. Are you understanding the beautiful nature of call option holder position and put option writer position? So holder position is always limited loss appears to be. But what is one more angle that you have to consider is probability. So if market goes up, will you make money in call option holder position? We don't know. If market price goes down, you lose. If market price remains same, you lose. If market price goes little bit up, you lose. Only when the market price crosses strike price plus premium, only then you make money. Whereas with respect to a put option writer position, you receive the premium already. Market remains same, you make profit. Market goes up, you make profit. Market comes down, you make profit. Only when the market comes down, 2000 minus premium, it falls below that. Then only you make loss. So probability is always lying in the favor of writer position. But what is the problem of writer position? If things go beyond your expectation, in the sense if it is too much falling down against your view, not so the market is not against your view little bit, but too much against your view, falling down drastically, that is when writer position you will have a problem. There is no one strategy which is good in all the times. Two things should have. You need to have a view. There has to be a strategy. And for you, your strategy, market movements, you have to keep on working around it. Keep in touch with the market always. So this is about taking call option holder position and taking put option writer position when your view is market is likely to go up. This is terms of the day discussion. Previous events, assessment on Friday, we thought 14,950, but market went up to 15,000, 15,100. I think it's likely to go to 15,200. We have gone horribly wrong. Market, you need not be right all the times. In fact, you cannot be the right all the times. That's why I told you. What is the quote of the day? Sometimes you should need to go long. Sometimes you need to go short. Sometimes you should. There is a time for fishing. In the sense, you should take a break. Don't trade. You have to understand when to take long position. So having a bullish view, when to take short position, having a bearish view, and when you should not take any trade. Okay, let's talk about assessment for the day. Local cues, Corona cases are reducing. SBI, stunning results. HPCL, good results. People are taking a bullish view on SBI, and SBI is a important stock in Nifty 50. Reliance having positive news. So global cues definitely positive. Global cues, let us look at global indices. I'll go to the internet. I'll just type now global indices money control. Everything will be available in the one place itself. Now we are expanding our horizon. We used to look at only two indices, right? NASDAQ and Dow Jones. Let's try to expand our understanding now. Slowly we'll move to incorporate many data points while assessing the trading for the day. I hope you're able to see the PPT. Regarding option interest, option chains and all advanced levels, I will try to cover in subsequent sessions. First, I'm trying to make you understand the position of a holder, position of a writer. Then you understand the open interest. If you don't understand what is option writer holder and which position you take, then option chain analysis and all will not be able to make any interpretations. Okay. So, and no data point is bad data points. And don't think only if I understand option chain, I'll understand everything. Understand as many data points as possible. So even these points, even though it looks very basics, they're still very important. Okay, so let's look at the indices. NASDAQ is down 0.48% down. FTSE, index, UK index is flat almost 0.02, neither up nor down, little bit down. CAC, DAX, that is Germany French index, positive. Asian markets, Nikkei, that is you have Japan, China, Shanghai, Hang Seng, Singapore and all, and they are all to 24. You see, this FTSE, CAC, DAX, the European market is not yet open. These are all Friday market, which is mostly positive. Actually, US market, NASDAQ is negative. Whereas Asian markets, you can see, which is today, because Asian markets, opens before Indian market, like Japan, China and all. So the Nikkei is 126 positive, Hang Seng is negative. So European looks negative, mixed. Singapore Nifty, I told you, SGX Nifty, that is also negative. So you can see global cues are mixed, neither positive nor negative. Chart analysis, if you look at the Nifty 50 charts, let's look at Nifty 50 charts. In trading view, let's go for it. That's where we usually look at it, trading view. I'll go for Nifty 50 index. It's a free thing, paid version also there. Let us go for free one. So Nifty charts, it's opening higher, I think, very good. Let's go for full featured charts. Let's look at 1 month charts. Okay, 1 month charts. You can see it gone up, gone down, up, down, up, down. The trend is positive. You see it's making higher highs, right? You see it is higher. If you draw trend line kind of thing, it is touching the higher high point. It came down, but every time it goes up, it is reaching the higher point and then coming down. So it is in that range. So it is definitely taking a bullish view. So Indian sentiment market is likely to be positive. So let's go back to our PPT assessment. So chart analysis is also positive. My take, I think market has gone up too much. It will go up. I think for today, it will consolidate. What will consolidate? I think today we will not see a drastic move. It started. What is that starting point? Let's see. Nifty is currently open price just started. It's around 15,200, 211. I think it will be around 15,200. That is my expectation for the day. It will be around 15,200. It will not move drastically because market has already moved up. Reason for to come down drastically not there. So my assessment for the day, it is likely to remain flat. Around 15,200 is only going to be the today's trading range is what I would believe. That's it for the today. Hope you learned something new. We'll see you tomorrow with different topics. Till then, take care. See you. Bye-bye.